Alright, good afternoon everyone. Happy Wednesday. Today is the 25th day of March 2026. New formula and all that stuff. There's a thing over here, there's another column on the end of that behind his head right here that says delta that I'm going to get into with you guys. And the reason this is in red is because it was the only call, all those others were puts in there. I may try to dress it up a little bit more so it makes more sense when you just glance at it. But anyway, that's just the option stuff. Good afternoon. If you haven't taken a free trial, I gotta go over this because I always forget to. Go here to tv-trades.ai, tvtrades.ai. You can take the free trial from here. If you go right here, click on free trial, it'll bring it down to the bottom. $25 a week, $90 a month, $9.97 a year. As a matter of fact, if anybody wants a discount on the annual one, just send me an email at support@targetviewtrades.com. Just put annual discount in the header, and I will send you an annual discount. Off the $9.97 a year. Give you $100 off the $9.97 a year. That is all of that. Alright, so let's go back here. Yeah, this is the 0DTE layout. Now, I'm just going to jump right into the option stuff, and I also want to trade. So let's bring this up and see if we have anything to trade right here. I want to put, not that, this in here. This is the one that everybody has. So it looks like I need to do an update on it. So I'll do update on all charts. I want to put that on, and I want it to have the mid bands on like it does, and we'll take some trades in there if we get some valid trades in here. Now I have my ES and my NQ set up. This is on the H contract. I'm going to put that on the M. Obviously I have not been using this one, but the ES is on the 1 exclamation point. The 1 exclamation point means the leading contract, just so you know. It's like when you have the rollover week like we had last week, it would automatically roll to the leading contract. It wouldn't wait until the volume rolls like we normally do. Okay, for those of you guys who don't understand that, that's what that means. Alright, so in here right at the moment we don't have any trades. My DOMs are all set up right now for these two time frames, so I will trade on these two time frames if we get the chance to. One of the things that I wanted to go over with you guys was, well, this channel. I don't know how to get rid of this. How do I get rid of this? Slide it over? I don't know. Doesn't really matter. Here, I'll slide it like that. This channel, this is the TV Trades Options channel, right? If you are a subscriber, you get access to this channel, and in this channel is where I put the actual picks. I try to put them, I put them before the end of the day. Although today may be a little difficult because I don't have them done yet. But I am going to show you something in this session coming up here in just a few minutes that is going to make it easier for you guys and for me to come up with the option picks that should be good for the next day. Right? You can see all these right here were based on a new formula. These are the picks from yesterday, and I think a couple of these got better during the day. I'm not exactly sure, but I think a couple of them got better during the day. I don't think any of them got worse. But these are pretty good. Alright, the average gain, if you took one of all of these, and this was something that I was going to get into, I had promised, gosh, I'm going through to make sure, well, I don't know, I had said that I was going to get into this. Let's say you got $5,000, you don't want to just take all $5,000 and put it down on one of these, alright, what I'm giving you down here is the average. If you did every one of these at the beginning of the session, and you got the last price, which isn't necessarily the best price, and you got the last price, and you got rid of it at the high from the point that I created. This was at 11:39 this morning. If you get rid of it at the high when I created that, then that's where these results come from. Okay. So your results are going to vary. They could be a lot better. If you had a better price, a better entry price, like on any one of these, if you had better than 169 on that 72 call for Uber, if you had like 1 instead of 169 or 130 instead of 169, then this number would be 75 to 90% probably. Okay, so these are the numbers that are at that time. When I actually put this stuff together, this is the last price that's listed. That means the last trade that's listed, and whether it's a buy or a sell, it doesn't really matter. It just shows what the last price was, whether it was at the bid or the ask. And this is the time that I actually created, because that was a question that came to me earlier. Like when do I get these numbers from. Is it like 1 hour in, or is it a half hour in? It's when I finish the morning session at 11:30 is when I just go back and see what's going on with all this stuff. That's why usually that's why usually by the end of the day I'll put another one in and say if it improved or if it didn't improve. Like the other day, these right here, these got better by the end of the session. Okay, this is what they were at here. They were 98%, 94%, 54%. And then it went up to 98%, 94%, and 54%. Is that the same numbers? It is the same numbers. Sorry, maybe that wasn't the one I was trying to give an example of. But anyway, there was something that did get better. I actually wrote they got better somewhere. But this is in the TV Trades Options channel. You have to be a subscriber to get into that channel. All right. If you are a TV Trade subscriber, you automatically get access to the options stuff. Right? I know there are some guys, some people who don't understand that and didn't know that. And I want to say this too. Some of you guys, in your email, you accidentally unsubscribed from the emails. And there are some annual people, some people that are annual members, annual subscribers. They hit the unsubscribe button somehow, so you're unsubscribed, so you're not getting up-to-date emails. All right? You're going to have, you'll just be getting stuff that gets sent to you from like the YouTube channel or any updates like that that you get. If you happen to be a subscriber and you're not getting emails regularly from me, or from GoToWebinar, or from YouTube, or anything like that, send an email to support@targetviewtrades.com and tell me you're not getting emails. And we'll have to go through the process to get you resubscribed, okay? Because that is one of the things, one of the guys in Germany last night said he's not getting the emails and he wanted access to this channel. And I looked and he had unsubscribed on the 23rd of March, actually he had unsubscribed, so 2 days ago. And I sent him what that looked like from my end, and he can fix it. Alright, I want to get all these things out of the way. Let me answer your question, Dan. When do you buy the end of the day options? At the end of the day, or do you wait for the morning open? I'm going to answer that in 1 second. I think Jeff has another one. Doesn't matter which broker you use, you still have a TradeStation account. Will that be okay? Yeah, TradeStation. If you trade in options, you can trade anywhere you want. As a matter of fact, you really don't even need to have charts if you're trading the options. I mean, the charts are a bonus, but you could just take the stuff that I put out at the end of the day and trade on that, based on that information. All right. So it doesn't matter who you have for a broker. I have Schwab, but it used to be Thinkorswim. But I have an options account there. But I also have an options account at a couple of bank accounts that I have. I have options. I can trade options at the banks too. Like Wells Fargo, I can trade options through Wells Fargo, and Ally, I can trade options through Ally. And I have one at what's that other one? Web something or other. I have one there. And I think I also have one at TradeStation too, Jeff. I don't really have anything in that account though. Do you trade just one contract of each option? You decide. That's up to you, John. But the prices that I'm giving you are for one contract. All right, but you can trade 2 or 3 or 10, depending how much liquidity there is in it. Okay. And the new password, Kevin, I guess I'll say this to everyone. There's a new password for the trigger. All right, let me just show you that. The password for the trigger is right here. It's right here. This password will no longer work on Saturday. It's Saturday. Everybody that's an active subscriber is going to get a new password. If you're not an active subscriber and you have the password and you're using that password, then some things aren't going to work for you anymore come Saturday or Monday if you don't get your charts over the weekend. And for those of you guys from the morning session, that is a pretty important thing that's not going to work for you, because it is this right here. That's not going to work for you, the midpoint and all that stuff from the morning session. Okay, so you got to be a subscriber to get into that. All right, and again, to become a subscriber, you go to tv-trades.ai and subscribe there. All right, this for the option date. How far out? How I give you that? Well, we're looking at weekly options, unless you're doing the 0 DTE, and I'll get into that in just a minute. But this stuff, we're doing weekly options, so Friday expirations. Okay, now listen to this part, write it down. Okay, Thursday, Friday, Monday, Tuesday, Wednesday. Thursday, Friday, Monday, Tuesday, Wednesday. I think I said that right. No, wait. Yeah, Thursday, Friday, Monday, Tuesday, Wednesday. We're doing the next week options. Right, hang on, I'm confused myself. Let me just look at the calendar. Okay, so today, Monday, Tuesday, Wednesday. That's what it is. That's what it is. Monday, Tuesday, Wednesday. We are buying this Friday's option expiration. All right. So Monday, Tuesday, Wednesday. So far this week, we're buying the 27th expiration. Okay. Let me just make a screenshot of that over here, and I will show it to you. Hang on. Grab this, and I will do. Oops, I didn't mean to do that. Hang on. Let's put it on a. Here it is. A 3-second delay. Okay. So we'll go here. So I gotta hit new, the 3-second delay. There we go. Okay. So why is it not doing it? Crap. There it goes. Okay. Here it is. This is what I was trying to do for you. So Monday, Tuesday, Wednesday, you buy this week's expiration. Thursday, Friday, you buy the next week's expiration. Okay, so Thursday, Friday, you buy the next week's operation, next week's expiration. Right, because by the time Monday, Tuesday, Wednesday roll around, you still have time left in it. That's called the theta. You still have time left in it to gain some value before Friday. All right, but on Thursday and Friday, you don't really have time left. They're just about 0 DTE options. So on Thursday and Friday, you buy the next Fridays. So like tomorrow and Friday, we'll be buying stuff that expires on the 3rd. Okay, unless they are 0 DTE. 0 DTE means 0 days to expiration. And I'm gonna that's this part right here. I'll get into that in a minute. But the other stuff, the regular symbols, the regular stock symbols, the regular equity symbols. Monday, Tuesday, Wednesday, you buy this Friday's expiration. Thursday, Friday, you buy next Friday's expiration. Okay, and then on the next week, that next Friday's expiration is Monday, Tuesday, Wednesday. You see how that rolls over like that? So Monday, Tuesday, Wednesday, buy this Friday's. Thursday, Friday, buy next Friday's. Okay. The question was for the option date, how far out? These are weekly options that we're working with. Every now and then, a monthly option will come up, and I try to eliminate those as I put them out. But every now and then it'll squeak by me, and I'll have a monthly option in there. There was one this week, yesterday, I think, Han or something like that. There was one yesterday that was a monthly option that didn't go anywhere, didn't do anything. I had like minus 1% change or something like that. Okay, so that is how you buy. That's how you figure out the option expirations. Okay, we're doing weekly option expirations, so it's going to be the Friday expiration date. All right. Okay, that was a good question. We got that done. That is for all of these options here. Okay. Now, this is the 0 DTE stuff. I changed this. You closely examine all the. Are you in here right now, Robert? You are in here right now. Okay. I've actually changed things, Robert. I've actually changed things. I'm going to get into that in a minute. But the 0 DTE stuff now. These are options. I changed it. I used to have 12 of them in here. Thursday to Wednesday Monday to Wednesday is the Fridays, is this Fridays. Monday to Wednesday is this Fridays. And then Thursday, Friday is next Fridays. Alright. Mush. So let me bring this back up. That thing that I just had a second ago. Here it is. So today, the options that we buy today, they'll be for expiration this Friday, the 27th expiration. Yesterday and Monday, Tuesday, Wednesday, the options that you buy are for the current Fridays, the very next Friday's expiration. But tomorrow, the stuff that goes out tomorrow night or Friday night, they will be for the following Friday. They'll be for the 3rd expiration. Now, the 3rd is a holiday, so I don't know how that's going to pan out exactly. They'll still be, I think it'll still show the 3rd as the expiration date. But, next week, we have a 4-day week next week. The 3rd is Good Friday. But, so we'll see what the expiration date comes up as. I think it's going to be still the 3rd. I'll check that. Well, let me just check it right now. Just log on here, and I will look at, I'll just look at Target, for instance, and the 27th. Yeah, okay, so it's the 2nd that they're showing the expiration date on. Alright, so next week, it'll be Monday, Tuesday, Wednesday. Actually, just Monday and Tuesday you buy stuff for the 2nd, and then Wednesday, Thursday you buy for the 10th. Okay, because it's a holiday next week. But typically it'd be Monday, Tuesday, Wednesday you buy for stuff that expires on that Friday. Then Thursday, Friday you buy for stuff that expires on the following Friday. Okay. Okay. Yeah. I think that is correct. Yeah, from Thursday to Wednesday, you buy that day. This week it's going to be Thursday to Tuesday, you buy this day. Okay? And then next week, Wednesday, Thursday, be buying the 10th. Okay? Alright, I just want to make sure that's clear. Alright, so there are going to be times where we do not have successful trades with the options, obviously. I try to get them as good as I can, but when they're not going to work out, they're just not going to work out. You might lose it all. You might lose whatever you put into it. You might lose it all. 75%, 57%. Typically, if it's not going in your favor, the whole idea behind these is we're going to have the initial jump. As soon as we get the open, we're going to have the jump, and that's where you're going to make some money right away. Okay, at the open of the next day. So that goes back to your question, Dan. Do you buy the options at the end of the day, or do you buy them in the morning? Well, the way it's going to work out today, I'm not going to get everything put out by the end of the day. So you have to look at it in the morning. But usually, if you buy the options at the end of the day, it's because there is a situation on the chart that is saying it's going to reverse at the open of the next bar, and it's on a daily chart. So at the open of the next bar, it's going to reverse. So the open of the next bar is the next day, and that's when it's going to reverse. So you want to buy it at the end of the day if you can, before 4 p.m. Eastern time is when you want to buy them, if you can. If you can't, and I put out these numbers, whatever the numbers happen to be, and I put them out, and then the next morning, because sometimes it'll gap the other way. It did that on a bunch of these today. It gapped the other way, and then it ended up going in favor anyway on most of them. So if you don't get to do it before the close, then just look at the prices at the open, and if the prices are better than the ones that I posted, then you're still in there. You can still get in there and take advantage of it. Okay. Looking at McDonald price, last price of 163. The price now is 90 by 70. With that spread, it's not comes off your gas. You can usually get filled at a lower price. You agree with that? What you can't do, Hal, is you can often split the bid and the ask. Okay, like here is this account that I made. It doesn't have anything in it. I made it just to show you guys stuff like this. Here's the bid and the ask right here, and this is on target. All right. Now you can split this. You can go for 170 or maybe between here and here, and you'll probably get filled. There's no guarantee you'll get filled. The only guarantee is if you go at that price right there. You buy at the ask, then you're gonna get filled. Somebody is selling it right there. Okay. But there's no guarantee. Now, one of the things that I wanted to show you, see how the delta is 56 right here? It's 0.56, and it's on a call, so it's 0.56. If it was on a put, it'd be negative. It'd be a negative number. Okay, this is negative 0.43 on the put. It's the opposite side of the ask. Of the call. So 564, it should be 436, I think, right? 436, yeah. It comes out to 1 or 0, basically. or no, 1 is what it is. But the thing that you want to have with what we're doing, if there's a whole bunch of things and you're trying to pick which one you should do, and you can afford to do them all, like in here, I said this morning, the way that things were going this morning in here, we had, the average gain was 17.37%. If you did every one of these things and you averaged it out, you got in there and you got out at the price that was the high at the time that I made this, then you would have an average gain of 17.37% if you did everything like that. Now, you might go in here and just pick one of these or two of them, whatever you can afford. You might say, okay, well, I can only afford that one and that one, so I'll pick those two, and those two are both negative today. Or you might say you like Oracle, or you like ANET, or you like whatever, and you choose that one. That's fine if you have some really good reason to think that the stock's going to move in the direction that you're trading it. Like some people follow stocks and they move a certain amount regularly. They'll move like $1 every day in one direction or the other at a certain point during the day. And you can find stocks like that, and you can trade on that. I know a guy that he used to trade 1,000 shares looking for a quarter move every time, so he'd make $250 every time he did it, and that was all he did. He had these couple of stocks that he had that moved. They moved a quarter every day, and he would do that on those couple of stocks with 1,000 shares on each one of them. You make that money pretty much every day. You can do that with options as well. The risk, of course, is that it's not going to go in favor, and you just got to get out of it. Before you lose it all, you got to get out of it. Don't sit there holding on to it forever, because the option values, they can go against you completely, quickly. And it's not like holding on to an equity. There's an expiration date on this. The longer you hold it, the less value it has. If it's not going up, the longer you hold it, the less value it has, because you're losing the time value. Okay? That's important to understand. But you see the delta right here is 56. For the kind of trading that we do, that is a good delta to have. So if we had a reason to buy a target 116 call right now, that would be a pretty good one for me I'd feel pretty confident that's going to do well tomorrow, if target even starts to go in the right direction. What that means is, for every $1 that this goes up, the value of the target call is going to go up $56. For every $1 in price movement, the value of the target call will go up $56. Okay? That's what that means. Okay, does that make sense? That's what it means. So you want, it also means if it goes down, it's going to go down $56. So you want to make sure you're on the right side of that. Okay? And how the ones that are in my list, they're all selected in here. It's all automated. I created this thing so that I don't have to actually go in there and do it all. It does it all. Now, the way that I have it, see this QQQ and SPY, this is on the 6 hour, right here, the QQQ and SPY. This is the daily, this is a 6 hour, and this is a 3 hour, that's a 2 hour, and that's a 1 hour. And I'll explain the reason why I did that in a few minutes. Okay, but all these ones here at the top, wow, that almost smashed my foot. All these ones here at the top, well, everything's automatically generated, but the ones at the top, if it's red all the way across or green all the way across, that means you got to put that's with the trend, and the trend is down. If it's green all the way across, it means you have a call that is with the trend, and the trend is up. If it's a call and it's not green, it's in a downtrend. If it's a put and it's not red, it's in an uptrend. Okay, so I tried to show you the ones that you can get into and stick with the trend. Now, the difference is this. The question that I'm answering right now is, how do you select those for your list? Okay. Now, the difference between the ones that are with the trend and against the trend is the ones that are against the trend. If you're gonna get into those, there's usually enough that you shouldn't really have to try to go anything against the trend. But if you look at the chart on one of these things and you see that it's a 50% retracement, and you know it's going to go down the next day because it's hit that 50% mark and that's where it's closed, and you know it's going to go down, have a nice leg down, and you want to go with one of those that's against the trend because you know that's 50% retracement. No, you can do that, but you got to be ready to get out of it right away if it doesn't go in your favor. Okay, so that one, see, it's real time, Hal. Did you see that? It's real time. That one just qualified. It just popped up all by itself. But what you have to do when you see that, with this stuff up here, once you see that, then you have to go to the chart. And like, let's just do this. Is this a daily chart? No, it's a 200 range chart. Let's go to this. It's a daily chart. And you have to go here, and you have to go down to your trigger, and you have to have your synthetic divergence on. We'll put the password in. This password is no longer going to be valid after Saturday. We'll put the password and put the synthetic divergence on. And so when you get one like that, you have to come down here. That was, well, it was just COP. So you have to go here and do COP. Look at the symbol, ConocoPhillips, and say, did it qualify? It did not. All right, but look at any one of these right here. Like Exxon, we'll do XOM, that's Exxon. And that has a call right now at 163.86. Did it qualify? And no, it did not. When I say did it qualify, what I'm looking for is this right here. I'm looking to see if this synthetic divergent crossed the blue step line. It didn't. So I wouldn't be taking that, all right? Or AMAT, applied materials, that didn't either. So that wouldn't qualify either. Let's do all the calls. CVX, Chevron, that didn't either. And VZ, Horizon, that pretty much did. Now, this is where the new formula comes into play, because right here, there's ambiguity, right? It didn't actually hit the corner, but you might say, oh, that was close enough. Well, that's where the ambiguity comes in, and that's where everybody gets different results, because some people say it's close enough, some people say it isn't. I say it's not. It's pretty close, but it's not. But, you know, you'd have to keep going through all these, and that's what I do for you right now. I go through all these before I put them out. I go through them all and see if it did qualify. Like that right there did qualify. So Abbott Labs right here is a valid put. So that would make the list. All right. RTX, is that a valid put? That is a valid put. That makes the list. AIG, I'm keeping track of these, by the way, because I'm going to put these on the list. AIG works. Okay, so all three of those puts right there. Write those down. You guys should remember these. ABT, RTX, that was RTX, and AIG. Those are all puts, and they all qualify. So those would be in the list for tomorrow. All right. And the Airbnb, see, none of the calls made the list. So if you go to A, B, and B, look at that. That kind of made the list. I don't like the way that it happened, but it did go through the step line on the way out. So, you know, you would add that one, A, B, and B, and do MDT. And that made the list. I don't really like that one either, but now I'm going to go through something else with these in just a minute. All right, Colgate, CL, that, oops, I clicked it on the wrong one. This is CL, Colgate, that made the list. So these are all puts that are making the list for tomorrow. So we only have a couple more. Let's just do them all. We'll do Procter & Gamble. I think that's what that one is, right? That didn't. See how it didn't cross the step line on the way out. Now that step line could move by the time the market closes. It could move. But I'm just going to go through this really quick. So Coke is okay. And what else did we have over there? Boeing. Boeing is good. So all the puts so far that I'm looking at are good. Hood. That is, we got enough that we don't have to risk it, okay? So if you see something that's really close like that, just skip it. We already have 1, 2, 3, 4, 5, 6, 7, 8, 9 other ones, and we have 2 more to look at. So PCG, that is Pacific Gas. There's a lot of these gas ones right now. PCG does it. Now I'm going to go through one more thing here that you guys, BSX is the last one, Boston Scientific. I used to park in their parking lot one time, and I was a software consultant. They had to bust us. They were building a new thing in my building. Anyway, if anybody's from Boston, you know that big white, long Boston Scientific building that's out in the harbor. Used to park us there and bus us over. It was great when I was a consultant because they paid me for the time I got to the parking lot. McD. Let's look at McD. I know you want to look at McD, Hal. McD. It's not in the list, so it's not something that we're going to trade. Okay, see the blue is outside. It's outside the cover, so that's not what I would do. Right here, it's outside the cover. That's why it's not showing up here, because it's outside the cover. Okay. That's what I go through every day. Now, I created something so I don't have to go through that anymore. Alright. And these all work on the daily chart. All this stuff up here works on a daily. This other thing that I have going right here, it works on a daily, but it also works on a 6 hour, and it's really built for the 6 hour. So, if you look at everything that's in here right now, the formula that is, I'm trying to minimize this, but I'm going to grab that one and move it down. Here we go. Alright, so at 3:30, in 26 minutes, you're going to see a whole bunch more stuff come into here probably, because the candle is going to close, the 6 hour candle is going to close. And so you have that half an hour to look at all this stuff. You guys don't have this yet, I'm still working on it. But you'll have that half an hour between 3:30 and 4 to see all the stuff that qualifies. And you don't have to go do all this. You just look at it, and then you can go put the trade on. It's going to say whether it's a call or a put. It's going to tell you whether it's with the trend or against the trend. But this, when you get a whole bunch of things, like right now, we just went through all those ones up there. We had 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 different things we went through. They were all puts, all different symbols. So when you have something like that, then what I like to do is come in here and look at, like, Target wasn't one of them, but let's look at ABT. ABT. Oops, that didn't go where I wanted to. ABT. Added Labs. And these are all puts, so just look at the put. And right now, this is a 327 Friday's put. Alright, it's got a 105 put. And the delta on that's 45. So I don't like a 45 delta. I want it to be 50 or greater. Alright, for the type of trading that we do, I want it to be 50 or greater. So I'm going to have to pay a little bit more for that. There, now it's 61. That's the perfect delta for what we do. But it costs a little bit more money. You see the difference right here? It's 159 there and 94 cents there. $94 to $159. The difference is if this goes up or down $1 right now, you get 45 bucks in your target, in your option value, roughly. And with this one, if it goes up or down $1, you get $61 in your option value. So you're paying a little bit more for it here at the beginning, but you're getting a better delta with it. All right. Hal, if it already went into profit, then, if it didn't go into profit, the question is, with McDonald's being on yesterday's list for this Friday, would it still be considered a trade to take? If it already went into profit and you didn't take profit, then you should dump it. Alright, if it never went into profit and you want to hold on to it because it's with the trend, it should work out by the end of the week, then you can do that. But if you look at this, let's just look at McDonald's. Alright, McD. And now comes the stuff where all those years that you put in with reading charts comes into play. Right? Because I know how you would put in years with me. So that all comes into play. So you'd have to look at this. If you're going to hold on to it, look at this and see why you had it to begin with. This is a leg down. This is a leg down. You should have a 50% retracement to right about here on this leg down. So it should go up if it was a put that you were holding on to. Okay? Okay, I'm going to get into that market in just a minute. If it was a put that you're holding on to, I don't remember if it was a put or a call, Hal. But if it was a put that you're holding on to, it's likely to go up some more and lose value in the put before it goes down. Alright? If you're holding on to it. I'm not saying, now I'm going a little off subject here. Hal asked me a question. He's asking about the I'm going to get into that in just a minute, Jessica. I want to do the 0DT stuff all at once. Okay. The gray area, the gray area is, Philip, it's the retracement. It's a 50% retracement between here and here. Okay, it is called inside the trigger. It's called the retracement lines right here. Okay. But that's where it should go up to. It should do a 50% retracement up to here, and then it should go down. So if you got a put, it's going to lose value while it goes up to here, and it's going to lose value in time while it goes up to here. And it might not bounce off of there by Friday. All right. This is a daily chart. So you have possibly 1 day to get up there, possibly 2 days to get up there, and then it might give you another signal to get down. So if you're in a short right now, or if you're in a put right now, this probably isn't going to work out very well for you right now. It'll work out long term if you roll it to next Fridays, or next Thursdays. Then it'll probably work out for you. But for right now, it probably won't work out for you so much. And you might find that a particular stock that doesn't fit your system, just thinking out loud. Okay. Let me answer the questions that I got in front of me first. Okay, that was one of them. But Hal, I just want to make sure we thoroughly answered your question, right? Okay, and Philip, if you've never seen this before, this, the retracement lines, it's also based upon where price sits, well, with respect to when this goes into and out of the overbought and oversold. That's how it determines when to switch directions and start paying attention to when you're above the midpoint and coming back to it. Okay. But this thing right here is the midpoint of the prior leg from here to here right now. All right, from there to there. From here to here right now. Okay. But over here, when it was above it, it was the leg from here to here. This would have been the midpoint of the leg from here to here. When it was printing it, it would have been, well, it doesn't look like it was actually printing that leg. It doesn't use a synthetic divergence for that part. It uses this right here. So it would have been from the last time that came out of the oversold. Way back here, it was using this from here, and it kept going up as it was going. Okay. Anyway, that's a different subject also. I know I'm spewing a lot of information. I had a feeling you guys were going to get me going in all different directions. But I want to cover this. Jessica, your question, the QQQ. You want to look at the QQQ right now. Okay, so let's look at the QQQ. And the QQQ, all right, this is on a daily chart right here. Now the TVT, you see this has an asterisk before it, the asterisk TVT combo. That's because it's a new formula that I've created to figure all this stuff out. So, hang on, Mark, to answer your question, you don't have to go in here and check to see if you have the cross over the step line. With the new formula, you don't have to do that. All right. And yesterday, the new formula stuff, I think it was Sunday into yesterday, maybe Monday into yesterday, the new formula stuff was 15 for 15. Today, from yesterday and today, the stuff that I did, it wasn't 15 for 15. It was like about half of it was good and half of it was not as good. Can you see the results? Well, I've been posting the results in the options channel. Okay, all the past results. No, I was out last week, so all the stuff that happened last week I didn't really post. I did 1 day last week. This right here was 1 day I did last week, and all 3 of those did really well. I said, thought I'd take a look since I had my laptop, and here they are. They were all calls, and this was on 318 picks for 319 last week while I was on vacation. So that was the evening, Wednesday evening. Those were all the picks, and then these were the results Monday morning. I mean, not Monday morning, but Thursday morning. Into it was up 170%. Moderna was up 13%, and whatever now was up 30%. That was the stuff I did that was all I did really last week. And these were the results once I got back. I think, what day did I post that? March 21st. So that was Saturday, I think I posted that. Yeah, Saturday I posted that. So they did get even better than that as the week went on. So the expiration would have been on Friday. For those, it was Wednesday, so the expiration, those would have expired on Friday with that much value in them. So the question was, can we see the results of the past couple of weeks with the war and all the market moves? Everything else since this week is gone. These are the results for this week. All right. These are all the results for the stuff that I've done this week. And this is important because this goes back to the question that I don't remember who had asked the question of me. Sorry, I just had like 1,000 emails I had to go through, and yours was one of them, and I said we're going to address it this week. It was actually a text message, I think, or it was in Telegram. But he had asked if you had 5,000 bucks, should you put it in just one? And the answer is no. I mean, you can spread it out over things that you like, spread it out over things that actually have good delta, spread out over things that you can afford, you know, if you want to. If you like something and you can afford it and it has the right delta, you know, you may want to put a little more on that. It's up to you. But if you spread it out, you know, like this was yesterday's stuff from Tuesday night into yesterday at 12:08 p.m. So this was at noon yesterday. If you traded one of every one and you'd gotten in at the list price, which was not necessarily the best price to get in at, and you had gotten out at the high at that point in the day, you would have made $1,245. All right, this column right here is the profit or loss that you would have made for that particular contract with that percentage gain or loss. That's excluding any commissions, but the commissions are almost negligible with options. Okay, these are the 0 DTE things. That's what I was getting into here. The 0 DTE options. Those are options that expire on that day. So I'm doing these symbols, the IWM, the SPY, and the QQQ. That's the NASDAQ, that's the Russell, and that's the S&P 500, basically, the indexes. They expire daily. That's why I have the 0 DTE column just for that, because they expire daily. So yesterday morning, these came out. Yesterday morning at these prices. And they all came out, all three of them came out yesterday morning at those prices. And I had put out a thing yesterday morning that said to go for those, right? And, nope, I didn't. I thought I put it out. So here it is right here. I put this out yesterday morning at 9:57 a.m. And if you had gotten that by 12:13 a.m., if you'd gotten one of each of those, bought one of each of those and gotten out at 12:13 a.m., you would have been up $616 just on those, buying one of each of those. Okay, now this one's $198, this one's $217, and that one's $68. You'd have to have like $500 to be able to trade all of them at the same time. But you know, back to that one subscriber who asked about having $5,000. You know, if you traded more than one of those, more than one of each of those, you know, you could have traded 10 of each of those, and then that number would be $6,100, 6160. And that's for the 3 hours worked. Okay, today it was profitable again. Today I thought I had put in the total numbers in here. I have that written. I have that somewhere. I had the spreadsheet portion of it somewhere. But it was up, I don't know, a few $100 today. At one point, did I stick it out here? 719. I think that's today. Yeah, that is today, 719. So the McDonald put right here, that's the one that you were talking about, Hal, right? So this was at 12:01 today. We've been up $719 if you did one of each one of those today. And that would have been 150, that would have been 11, that would have been 45, that would have been 165, 169, 273, and 34. So you could have done all that with $500 or $600 too. You could have done one of every one of those. This is McDonald put you're talking about, though, the 3075 put. Looking at the daily chart, Hal, it looks like it's going to go up some more before it goes down. All right, if you didn't get any profit in it today, you know, the McDonald put we did have at one point today. There was a chance to take some profit in it. The 163 was the high at that point. In between there and there, I don't know what it's at right now. Okay. All right. So let's get back here for a second. You see, we have. This is not the right one. This is what I want to get into. This. All right. So in here, I have just these three indexes. I have the IWM, the QQQ, and the SPY. I did have 9 other symbols. You see that just added right here at this time of the day. It's 317. You're going to see a whole bunch of things get added in here in a minute. Remember what I told you about that one that comes up at 3:30. I think you're going to see all that happen here in just a few minutes. Now you want to see this symbol right here, the QQQ symbol. Jessica. Okay, this is the symbol down. This is the symbol down here. Okay, the TVD combo, and that's on a 200 range. You want to put that on either a 6-hour or a daily. Okay, for this stuff here, it's working off the daily. So we look at it on a daily, then this is what it looks like. And put the midpoint on there. Hang on. Let's put that on there. Oops. Trigger. I'm gonna look at the trigger anyway. So we'll go in here, put the password in. Again, this password is not going to be valid after Saturday. I'll put synthetic divergence on there too. Okay, so here's the midpoint. And this is the daily. So it has not come up and hit the midpoint quite yet. But this is the leg down. This is really a 50% retracement of the leg up. So what it should do from here, is another leg down like this. Now this took almost a week to make this whole leg down. We're 3 days into it right now. Starting from here, we're 3 days into it. So we're due for another leg down. Another big down day is what it's due for. This down here is just about setting up the synthetic divergence put or sell is just about setting up down here. Okay, so that's almost where you would want to have it to sell it, just using that for your entry technique. But if we go to a 6 hour on this, you're right at the midpoint here at the 6 hour, and you just had that going in there. And I want to put one more thing on here. This. Okay, so that's not really suggesting it's going to go down right now. The thing that would suggest it's going to go down would be like this right here suggests it's going to go down. This right here suggests it's going to go down. This right here suggests it's going to go down. This right here suggests it's going to go down. This right here suggests it's going to go down. And that's basically what the new formula is built on. Okay. But on the 6 hour, it's not saying it's going to go down right now, but on the daily, it's saying it should go down. Okay, and that's why on the QQQ, it was just showing up here just a second ago on the QQQ. Right. When is it still calculating right now? I guess it's not. Okay. Well, it doesn't matter what symbol you have it on or what time frame you have it on for these things, because the time frame and the symbol are built into these. All right. If you look inside the TVT combo, let me just show you how this works. Okay, inside the TVT combo, it's actually the TV trades indicator that you put on. From inside indicators, it's the TV trades that you actually put on. You put it on like this, right? And then that just came up somewhere down here. It's this one right here. Okay, and inside here, this is TV trades. And you see what that did down here? Where it came up, right in here. It added the background for TV trades. It added the arrows for TV trades. If I get the range trigger off of there, it gave you all the TV trade stuff in there. So if you go inside here, you go from TV trades, go to scanner, then it turns it into the scanner. Okay, and see, it's still calculating right now. It takes a little while to do the full calculation, and when it turns it into the scanner, it gets rid of the background color, and it does the scanner for you. So inside the scanner, there are 5 different lists actually. There's list 1, which is 40 different symbols. List 2, which is another 40. List 3, which is another 40. List 4, which is just about another 40. And list 5 is just the 0DTE stuff. So if you want to look at the 0DTE stuff, you go to list 5. Okay, and if it's got anything that qualifies, it'll print it. But the first list that I have, the first 40, those are the ones that qualify. The next 40, it's still calculating right there. Those are the ones that qualify. And the next 40, still calculating. Those are the ones that qualify. And the final 40, see, it's still calculating. Those are the ones that qualify. So we've gone through all those symbols already and picked out the ones that match the synthetic divergence. That is going to make it. Okay. The TVT combo is available to everyone right now, Craig. Yep. It's not called TVT combo though, it's called TV trades. It shows up as TVT combo here, but it's called TV trades in here. So all you guys that are subscribers, this is available to you right now. I actually put that out here in the Telegram channel. I put a video in there. Yeah, you have TV trades. You probably need to refresh it. There's a video in here where I go over all this. This video right here, if you watch this video, I think. Is that it? No, maybe this one. That's a quick guide to the blue arrows. I know I stuck a video out here somewhere for you guys. But I made a video about it. Is this it? No, that's today. Anyway, there's a video out there that I made that explains it, where I created that thing. I think it starts with, it said I've been busy. Oh, and I wanted to make a quick video. Nope. Is it further up? New layout. I don't know, it's in there somewhere. But I said I've been busy. It was over the weekend that I did it, and I created all that so that you guys have access to it, and you can put it on your own charts. And the way that I have this zero, I mean, you have the layout. You can just use this layout that I created for you. I put the layout out there for you too. You just use the layout that I created, the 0DT layout, and I'll give you this right now. This is the layout. It's shared. So I can copy this, and yeah, it's shared. So I'll put this right out here for you. Oops, not there. I'll put it over here. You got the one that says I've been busy? That layout that I just put right there. If you have access, if you're a subscriber, when you bring it up, it will bring up all this stuff. If you're not a subscriber, it'll try to bring it up. It'll have a red exclamation point on everything that you're not subscribed to, which is everything. So you do have access to this, and you can look at this just the way it is right now. You won't be able to see this stuff, these four right here. You won't be able to see those. That's going to have a red exclamation point, because that has got the asterisk before the GPT combo. I haven't created that for everyone yet. That uses a new formula. So in 5 minutes, a bunch of things are going to pop up in these right here. When that candle closes, I think you're going to see things pop up into here. All right, and then we can go back and look at the list that we have for tomorrow again. All right, so I've been talking a lot about options, and I haven't taken a single trade yet. Let's go see if we have a chance to take a trade. We did have a chance to take a trade there on the yes a minute ago. It was right here at the top of that bar. Okay, and we have another chance right now on the yes to go the other direction, because yes, synthetic divergence right here, and this is actually with the trend. So even though it looks like it's going down, everything looks like it's going to be going down right here, you even had a blue arrow. Now the blue arrow in the middle isn't as significant as a blue arrow on the outside. Right? A blue arrow on the outside is more significant than a blue arrow in the middle. Okay. Okay. So let's see what we have here. Let me just take a drink. I knew I had a lot of stuff to go over in this session. What's the best time to take these option trades from the list? Right before the close, Hal. The new ones that are going to come out here in 4 minutes. You guys don't have access to that yet. But when I do give you access to it, it'll probably be over the weekend. I want to test it out a little bit more. But you won't have to go through. You won't have to go through and make sure they all have this cross down here individually. If it shows up here, it's going to be good enough to trade. Okay, then you'll just have to go through, and you can narrow it down by just looking at the delta. All right, so all those ones that I looked at just a few minutes ago with you, to see if they made the trade, to see if they made the synthetic divergence cross. All of those, we can narrow those down by going and checking the delta on all of them. Right now, that is something else that we can do. I think it was right here, right? So ABT has a delta of 59. That would be okay. ABT is okay. So ABT is what? A 106 call at 253. Oh, it's 106. Oh, I don't know. They're all puts. So it'd be a 106 put at 253. Sorry. 106P at 253. So then you go to RTX was the next one, right? Go to RTX, and that was also a put. And that is currently a 195. You show the full quote. Now that is not a delta that I'd want to trade right there, and it's already going to be $174. You can change it to make it be a delta that you do want to trade. That's better right there, but now it's $281. So it's not really one that I want to trade. Okay, so if you go through all these things to get the better ones, like AIG earlier today, AIG was a good one. And we'll see. The AIG, it's a 75 put. So right there, it's only 65 bucks if you were to buy it right now, but we'll go out to 76. So 76 put. We'll put that one down, 76 put. And the delta on that one is 62. The cost is 240. So it's a little bit more. It's not 240. The last was 240. The cost right now, the last was 240. So if I wrote down the last, that'd be horrible. The cost right now is 110. Okay, so the cost right now is 110. And that is Friday's expiration, and it's got a delta of 62. I don't remember the delta on the other one. Do you remember the delta? I think it was 53. This is AIG. Okay. So RTX, I'm sorry. I just wrote this all down on the wrong thing. The RTX I said I wasn't going to do. Right. AIG is a 76 put with a 110 and a 62 delta. Okay, so A, B, and B is the next one. And that is also a put. So it's saying the 137 put right now, and it's got a 40 delta. I mean, you can go with a 40 delta if you want, or you can bump it up to, that's not going to work out so well. It'll bump it all the way up to 133. What that suggests is that it's probably not going to move all that much. But it's got a pretty big spread between the bid and the ask right here, too. And the last on that is 335, but the bid is 148. I mean, the ask is 148. So it's what that's suggesting is the price is going up quite a bit right now, and that's why it's giving you the put, because right now when it goes up, it slides this up through everything going into the overbought, and it's saying it should be going down from there. It should have a reversal. Okay, but yeah, one less thing to look at, Hal. See right here, we just hit 330, and look at all the things that populated in here. All these things just populated in here. See what I mean? That's what I was telling you. When that 330 time rolls around, that candle closes, and then it populates all this. So you can just go through all this and see which ones are in both, and then just pick the ones that are in both. If you want to do it that way, that's one way you can do it. But then you can go through and narrow it down even more by looking at the delta on all these things. Okay. The question was, are they better with the trend? The thing about getting it with the trend is if you got an expiration that's like, let's say you bought for next Friday's expiration and you get something and it's not with the money. Like right now, Hal is in the McDonald put. That was with the money earlier, but it's not with the money now, but it expires on Friday. So he doesn't have a lot of time left for that thing to be worth anything. But if it's with the trend, and you have a whole week's worth of time left in it, then by the end of the week, it's likely to get back in sync with the trend. That's the difference, Philip. So is it better with the trend? If you have some time in it and it's not making money right in the beginning, then it's better with the trend. If it's against the trend, if it's one of these that's against the trend, then you have just like that first hour for it to make money, first hour or two on the next morning for it to make money. And if it doesn't make money, then you probably just want to be out of that. Okay, let's just jump back in here so we have an opportunity to trade anything again. Because I missed the last one. See, this blue is in the middle. It's not going to be anything you want to do. This black is in the middle. It's not going to be anything. That black right there you could have done a minute ago. Could I set up my program that already picks the ideal delta? No, I can't. I tried to, but the delta changes all the time, Robert. I did try to do that earlier. As a matter of fact, I created a formula that would, if you gave it the delta, it would calculate how much money you would make, and it would do all the math for you and calculate how much money it would make if it got to the target that I had created for it and all that stuff. I had done all that at one point. But getting the delta, and even getting the formula for the delta, there's many different formulas for the delta. So I tried to get that so I could just do the math myself, but everything changes. There's so many variables that go into it, and different places do the formula differently for the delta, which I know is kind of frightening, but if you find one that works for you and you stick to that one, then that's probably going to be okay. Okay. But I did try, really, Robert. I wish I could do the whole delta thing. That'd be great. But you see all those ones that just popped up, I was saying, when that candle closes, it's going to tell you what ones qualify, and all these qualify. Now, there's no way I'm going to go for all that. But the RTX, that was one that I took out a minute ago. That goes right back in. All right. AIG, that was one that was in a minute ago, and that was one of the 76 put that we just looked at. a minute ago, that's definitely going to be in. So the 76 put on the AIG, you know, I might go buy that right now. But if you look at these other ones, like the Airbnb up here, is that in down here? You don't see Airbnb down there. MDT. Now Schwab is one of the ones that's monthly. It's a monthly. No, it's not Schwab. It's Sherwin-Williams is a monthly expiration. I'm going to pull that out of the list. The Sherwin-Williams. I think that is on one of these lists over here somewhere. But it's a monthly expiration. I'm going to pull the monthly expirations out. Okay. You did just buy it, Jessica. Good. Can I show adding the scan to your charts for subscribers again? Let me just start with a fresh chart. Okay, let me hit save on this. And I'll go to a brand new layout. And this is how you do it. Okay. Let's do scanner. Oops, no, that'll work for right now. Okay, so I think I'm getting all caught up with the questions, I think. Now, by default, this is what a chart looks like. Just get rid of that. When you put the scanner on there, it doesn't matter what symbol it is. It doesn't matter what time frame it is. All that, it just doesn't matter. Okay? Just go into your TV trades and throw the TV trades on like that. Okay? It says TVT combo. It doesn't say TV trades anymore. If you hover over it, it says TV trades. But up here, the words are TVT combo. This is what the TV trades looks like right here. This is the TV trades. This was the original stuff that I created when I started TV trades. This was all I had. All right, and I had like inside here, on this side, I had like just this much, right? There was nothing else to it. I wanted to make it really simple so you guys didn't have to go through all this stuff and see 100 different things that you had to choose from and all those things that gave you indecision and confusion and all that. I didn't have any of that in there at the very beginning. But I knew it was going to evolve. And so here we are, almost 3 years later. And all you have to do is go up here. Click on this and go to scanner. It's going to change all this. Right? And it's just going to go to the scanner. It's going to go to list 1 in the scanner. Right? Now, it takes a little while for it to calculate everything. But that's list 1 in the scanner. Now, you may remember that. If I say OK here, you may remember that from this list right here. That's list 1 in the scanner. Okay, so if I go back here, that's that information right there. So you can put multiple of those on, which is what I did in here. I put multiple of those on, and I go to each different list within it. So right now, if you wanted to do it this way, you could go here and put another one on like this, and then go in here, change it to scanner, and then go down here and change it to list 2. And it's going to put it right on top of that one. But when it's done, see, it just put it right on top of it. But when it's done, you can go here and do move to new pane below. And now you have list 1 and list 2. Okay, and you can put the price, you can move the price off of there if you want to, like that. So you have list 1 and list 2. Okay, and you can add a third one and a fourth one and a fifth one. You can have all 5 of them. And remember, list 5 is the 0 DTE stuff. It's only got those indexes in list 5. If you go all the way down here and go to list 5, it's just got the indexes in it. And that's the 0 DTE stuff. They expire daily. Okay. There is a video about that, but now you have it in here too. This is all being recorded, David. Okay. So that's how you create the whole thing. That's how you put the scanner on. That's how you get all that information. Remember, right now, these things you do have to go and check and see if you got the synthetic divergence cross, to make sure it's okay. And then if you get a whole bunch of them like we have right now, you want to go in and, to filter them out, go in and see what the deltas are. If you have a really low delta, then you probably want to skip that one. Okay. But like all this stuff right here, I'll go through all that at the end of the session. But right now, the ones that I would definitely do would be AIG. Would definitely be one of the ones that I would do right now. The AIG. Okay. And and I don't remember what that costs. What was it? $110? Yeah, it was $110. So the AIG is definitely one you can do right now if you wanted to. And if you go through these right here, the Airbnb is not on both. Colgate is on both. Colgate's a put on both. MDT is a put on both. So you'd probably want to do both of those. XOM, you probably want to do that call. Even though that call didn't qualify up here, it qualifies down here. All right. And this is a different thing. These look at a 6-hour chart. Right? All these look at a 6-hour chart. And all these up here look at dailies. Okay. This over here looks at a daily. But these are all 6-hour charts. Why the start? You mean on that one over here? Or this one? It's just what came up. It doesn't matter. It doesn't matter what it is, hell. These numbers aren't going to change. I can change this to be XYZ, which is actually a symbol block. And these numbers aren't going to change when it comes back up. Right? The code for that is built into the actual indicator. It's built into the combo itself. Those are hard-coded. So it goes out and checks all the different things on the time frame that I give it in the code. It goes out and checks all the different things. The code, that's actually something that you set in here. Time frame is right here. Okay. So you set it right there. What you set up here doesn't matter. Okay. I still don't have a trade. That is the NQ right there. That's not a valid trade here on this one. Okay. Back in here for a second. Alright, I want to make sure I answer all the questions because this option stuff is going to be, it's something, I know it's a step away from the futures, and the futures is what we've been doing forever and ever and ever. But the options is stuff that you guys can branch out into if you want to, and it's stuff that, it's an overnight thing. Usually it's an overnight thing. But there's a ton of money to be made in it. A ton of money to be made. And Robert, you were saying, you would text me that one time about the weekly options, and somebody had told you that there's a ton of money to be made in the weekly options. There is a ton of money to be made in the weekly options. There's also a ton of money to be made in the daily options. That's what this column over here is for. The 0 DTE stuff. But with that, you got to get in it. You got to be in the right direction at the beginning of the day, and you got to be in and out by noon. Right? I mean, if you're way in the money at noon and it's really starting to trend in your favor, then you can stay in it and just start locking in profit. But yeah, you can add the delta. Yeah, it's in here right now. And this is built on the 0 DTE stuff is on a daily chart. I'm pretty sure I made that on a daily chart. I just check it and see. Pretty sure I put that on a daily. Yeah, it's a daily chart. Scan time frame is 1 day. The 0 DTE stuff's on a daily chart. So at the end of the day, if it says the next morning it's going to reverse, that's when you want to take the trade. Okay. And options can take time. It's going to be a lot less time when you get this formula in here. It'll be less time. Okay. But I'm showing you how to do it so you can do it on your own. You don't need to wait for me to put it out there. Like right now between 3:30 and 4 o'clock, right now you could be going through all these things and saying, okay, these are the things that I'm going to take. Or this is what I can afford. Like some of these are going to be expensive. If you have something that's really high priced, the options are going to be expensive on it. Or if something moves around a lot. This one right here, SHW, that's Sherwin-Williams. I'm going to take that one out. That's a monthly. But if you go and look at the actual option price and and it's priced more than you want to risk on that kind of a thing, like some people might not want to risk $1,300 on an option. But if that $1,300 option goes up 50% in 30 minutes, and you're making your money back really quick. But if it goes against you, it goes against you just as fast. There's 8 scans, and you don't have access to these yet, Philip. That's why these will have the exclamation point on it for you right now. These have the star TVT combo. You don't have access to that yet. I'm still working on it. I'm making it better. Robert, I'm making it better. And the AIG's already up 2.38% since you bought it just a few minutes ago, Jessica. Let's see. The list that I put out the other day, I think there was one that I put out the other day where it was, I only put out the things that were in both the other day. And it was a good list. That was the one that was up $1,200, I think, in the first 2 hours in that list. Alright. I'm considering not taking any trades in this whole session because I'm not really focused on it. I've gone over a lot of all the option stuff, and you guys are asking good questions, and so this could be just a whole thing about options training, because this is something that I think a lot of people have an interest in, and this is something there is a ton of money and a ton of opportunity. You can get into it and risk really not that much money. Like if you're trading futures and you're risking $100 a trade in futures, you can do the same thing in this, and you'd basically be making the same money if you made $100 a trade in futures. But with this, it's options, and you could be making more or less, but it's not the same as sitting there waiting on your charts to move, or messing things up because you interpreted something wrong, or waiting for this to cross that, whatever. 0DT, not clear on how to do that. I just said something about it reversing the next day because these expire daily, so there is no next day. Well, the 0DTE trigger in the morning. So what you got to do is you wait until it happens in the morning. You just got to look at this list right over here in the morning. And if you have the SPY, the QQQ, or the IWM in here in this list, usually the one on the bottom is the best, right? Because that's the daily chart, so it's going to have a bigger move. But this is a 6 hour. This is the way it should be: a daily, a 6 hour, a 3 hour, a 2 hour, and a 1 hour. And the reason I do that, you can break it down like that if you want, David. I'll show you how you can do that too. Just give me a minute. Alright, so in here, the stuff that's on the daily with the 0DTE, the stuff that's on the daily in the morning, if it triggers in the morning, you want to get on those right away in the morning. Sometimes in the morning session, like Monday this week, anybody that was in the morning session with me, the first 7 minutes I was putting on those trades that were in here, because all three of them I triggered. I think it was Monday, it might have been Tuesday, it might have been yesterday, but the first 7 minutes I know I was putting these trades on from 9:30 because that's when the triggers came, and I put them on all of them, and I made money on all of them. But when you have an opportunity to do that, get in there and put those trades on as soon as the trigger comes at 9:30 in the morning. Get in there and put those trades on, and they should be done. They should be showing you profit by 11:30, 12 o'clock. All right. Now, David asked me if you can narrow this down based on companies that just have a net worth of 50 million to 5 billion and all that. You can. And if we go to this, I think I have that on this page here, don't I? I used to have it on this page. I guess I took it off altogether. Well, I can show you a different place to go and get that. But you can go in and filter it on things like that. Let me just throw this in here. If I go here to mytradingiq.com, I put it on this page too. This right here is a place you can go and do that. If you go in and filter, go in here and build a filter, and in here, I don't know what I just did. I just refresh this page. There you go. If you go in here, you can build a filter that says market cap, 500 mil, say 300 million, and you can do volume, only something that's got like $1 million in volume daily, average 10 day, and you have a whole bunch of things in here. You can go and filter them all out, and it's going to give you a big set. Okay, so that right there gave 16 matches. That filter narrowed it down to 16 different stocks. But there's other filters in there that I don't know. They're probably ones that have earnings this week, I think, is what the other thing is. So, but you can do that if you want to, but that's time consuming, David. If you want to go in there and do that, it's up to you. What's 7:14 now? What did the AIG thing go up even more? Oh, cool. And that AIG, I'm telling you, that was a good one. And it was at 110 when I mentioned it, and now it's at, I'll bring it up here. I'm just not going to take any trades in this session, right? So I won't put it in the average or anything like that. Was it AIG? AIG. And it was the 76 put, right? 76 put. It was at 110, and now it's at 120. Is that right? Are we looking at the same thing? I think that's what I was looking at. And the EBT was 106. That's gone up too. The EBT, that was at 53 cents. That's gone up. It's gone up in the time that I've been talking. It went up from 53 cents to, well, the last was 253. That wasn't the one. The current bid is 250, 125. So it's gone up 100% since I said that a few minutes ago. And yeah, Jessica just said she always does good with Home Depot, and that one's not let her down. Yeah, I'm knocking on wood for her, but you'll find favorites like that. You know, I actually went out and I found a list of like 40 or 50 stocks that are really good trading stocks that usually have a good delta, that are good option trading stocks that usually have a pretty tight spread. And you know, I could narrow it down to just those, but there'll be days where you hardly have any trades. You know, I could put a list 6 in there that is a concentrated list of just those, so you guys will be able to just go and pick out of that list. You know, just say list 6, and you can do that. You know, I'm doing my best to make this the best for everybody. You know, including me. You know, I want to make money on all this stuff too. But those two that I listed a few minutes ago, the ABT and the AIG, the ABT's already doubled in price. And it's good stuff. All right. It's 350. Let's go look. The markets should be jumping a little bit here. Maybe we can get one trade off. We don't have anything here right now. We could sell that based on the white bar. It's way up here, though. This actually just gave a secondary shorting opportunity right there, and it's got the blue arrow. So the S has got a whole bunch of reasons to sell it right here. All right. It had the white bar. It had the divergence. Just a second ago it had the divergence, and it had the blue arrow. It's still not going right. I think everything's going to run right here, right at the end of the session. It looks like it is. It could retrace. It should get down here to this. Is where it should go down to. Alright. Yeah, were you up? Did you double your money on the Home Depot yesterday, Jessica? I thought that's what you had sent me, that screenshot. I mean 500 per contract on that one that you did. Good. There goes the ES. There goes the ES. Now, what number should it get down to? It should get all the way down here to 35.25. That's where it should go down to. 35.25. There's $1,000. So if I have one trade with $1,000, okay, we're gonna have more. It's $1,500. So one trade with $1,500. I could live with that. We still have 8 minutes left. We could have more trades here with 8 minutes left. There could be quite a few more trades. You have the white arrow long here with the trend. Not the white arrow, but the white bar long with the trend, and that just gave me a break even. Well, I gotta write this down. I have 2 trades now. The break even. ES, we're at plus 12. 2 trades. Alright, the NQ doesn't have anything right here. Actually, this right here suggests a long on the NQ. This doesn't suggest anything yet on the ES on the long side, but the NQ, this synthetic divergence right here suggests a long, and be with the mid-band trend. So, and that just went to plus 10, and that just gave me plus 10. Okay, so I am getting some trades off. I have 3 now. And this is actually suggesting a short. It's against the mid-band trend right here. But it's suggesting a short, the synthetic divergences from right here. The ES isn't suggesting anything yet. But let's go back. I want to answer everybody's questions about everything else right now. That could work out here. That short could actually start running right now. But all of these things, I'll put out the things that I'm going to put out, the ones that I already did put out, the ABT and the AIG. Those are okay. The other ones that I would suggest right now, I'm going to say maybe no MDT. Go with MDT. Okay. Colgate. That one. COP is not on both. PCG is not on both. ANET is. We'll go with ANET. Is that on my list? It's not. ANET. Exxon, XOM is on both. PAX. AMAT, we already got AMAT. PSX. Okay, so we have 6 minutes left. And I'm going to give you verbally what I think. And then I'll go in and put the finishing numbers in here in a few minutes. PG is one. CVX is one. Coke is one. I think Coke was on our list earlier too, right? Horizon is one. And that's it. Okay, so these are the ones that I'm going to put on the list. There's going to be ABT is a put, AIG is a put, MDT is a put, Colgate is a put, so MDT and CL are puts. ANET is a call. XOM is a call. I'm sorry, did I say ANET? ANET is a put, sorry, ANET is a put. AMAT, I think. Okay, yeah, ANET is a put, sorry, ANET is a put. XOM is a call. BSX is a put. CV, where is that? CVX is a call. CVX is a call. PG is a put. Coke is a put. KO is a put. And VZ is a call. So the calls are XCM is a call. CVX is a call. KO is a call. And all the other ones are puts. ABT, AIG, MDT, CL, KO. And PSX and ANET. Alright. How do you get the mid-bands on your swing band indicator? The mid-bands aren't in the swing band. Oh yeah, they are. I'm sorry. Let me show you that. I'm sorry. They are. Let's go back here. Sorry, I stopped looking at the trades. Crap. What time is it? 3:56. We might be able to get another one off right here. Okay, the mid-bands are right here. If you go to the TVT swing bands, Jason, just do this, show mid-bands right there. Okay, and the white bars come from here. So this is the show mid-bands. You turn that on to show the mid-bands. And that's going to have the purple bars as well. The purple bars are the ones that straddle it. Okay, and if you want to show the white bars, they are the ones that are on the other side of the trend. They're like down here. If you're in an uptrend, they're down here. If you're in a downtrend, they're up here. Okay. That ES is now moving. My stop just went to break even on the ES. Here, I'm going to lock in one tick on that. And be out with one tick. Okay, so that's my fourth trade. That's how you put those on, Jason. Okay. And the other one, Philip, that you hadn't seen, Bob. Alright. Would I trade those now before the market close? Yeah, hell. That's why I was trying to get them out to you. All those options that I just said. But you're going to have to go in and figure them all out yourself. I didn't give you the actual prices of the last or the actual option. You're going to just have to go and figure out which ones they are yourself. Okay. It would take me a few minutes to do that. I mean, I can do it. really quick, but then it would be really disorganized for me. I did the ABT one, I did the AIG one, the MDT, CL, ANET, XCM, BSX, CVX, KO, and VZ. I'll have to do all those for you. But I'll put it all out pretty soon. And if they don't actually do anything at the open, if they don't gap up or gap in the right direction at the open, you can still trade them at the open. Okay. Alright, this has been a long session of talking for me. I hope I didn't bore you guys all to death. I know there was a bunch of information, and most of it was about options. I only got a few trades off. Let's see, I got 4 or 5 trades. Of the 5 trades, we're plus 13 on the ES and plus 10 on the NQ. So if I go into the Wednesday totals, we hardly traded at all. This is going to be session 45. And it is 325. And on the NQ, we got 10 ticks. And on the ES, we got 13 ticks. So we'll carry this down. Copy, paste. Hey, it's better than last time. We had 4 or 5 trades. That was total number of trades, that's correct. Total number of stops, 0. Oops, wait, those were last week's. This is 5 and 0. So this would be 100% today. And this number goes to 45. Okay, so those are all the numbers now. This session we only took 5 trades, and we're up $2,125 with 10 contracts, or $212.50 with 1. We got 10 ticks on the NQ and 13 ticks on the ES. Those are the only 2 markets we traded in 5 trades. And so we had 2 break-even trades in there, and 1 plus 10 on the NQ, and 2 break-evens on the ES, and 2 that gave value. 1 was a plus 1, and 1 was a plus 12. So that puts us now in these sessions. We are now up $192,675 with 10 contracts. With just one, $19,267, with 1 micro, $1,926. All is plenty to pay for these services. Do I prefer to interface with TradingView through the browser or through the app? And the reason for each one. For TradingView, it used to make a difference, Craig. I used to have to run both of them. Remember back in the day when I used to do that live stream on TradingView? It was, probably 3 years ago. I used to do a live stream every day on TradingView. I had to run 1 browser and 1 desktop app. The question is, do I prefer the desktop or browser version of TradingView? Now that I don't do that anymore, I use the browser version most of the time. It doesn't really matter, I don't think. The desktop app probably, it's good in one sense, but it's you save stuff to your desktop that you don't have access to on another desktop occasionally. That's the difference, really. The thing about the browser app, though, if you're logged in like 100 different places, like I happen to be sometimes, I have like 15 different browsers open on 3 different computers, and every now and then I'll get logged off because one of them suddenly logs on another computer to log me off on the current computer. But it's a quick fix. You can't load the chart links through your desktop app. I don't know what's going on with that, because it shouldn't make any difference, really, Craig. And you can do it in the browser mode. It really shouldn't make any difference. It's all the same code, and you're downloading it all in the same way. If you take the same layout in one and open it up in the other, you should be able to do that. Or take a layout in the browser and save it to your desktop. Save the browser, the layout version to your desktop with a different name. You might be able to open it up there. But anyway, it is the end of time, baby. Sorry. It's the end of time, guys. It's just I saw Jada. It is the end of our time. So, if you haven't taken a free trial with us, go here to tvtrades.ai, and this is how you take the trial, right? Free trial right down to the bottom. Again, anybody that wants, if you want a discount on the annual, if you're on the monthly, you want a discount on the annual, I'll give you a discount on the annual if you want to do that today. Otherwise, it's $25 a week or $90 a month, and the monthly is our most popular. It's not. I know it says it there, but it really is the most popular. We actually have more people on the annual than we do on the weekly, which is kind of funny too. But however you guys want to do it, sign up for the trial and get in there. As I said, if any of you guys, have been getting access to the TV Trades Range Trigger password, this one, without being a subscriber, that's going to go away on Monday. So all the stuff that I do in the morning session, you're going to need that password to do that stuff in the morning session. Not all the stuff, but to have the mid-bands and stuff like that. Okay, that's part of the password thing. Anyway, these are a lot of things I got to go through right now. And actually, I'm not going to go through all of them. I'm just going to go through the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 that we went through. And I'll have that out to you guys in just a few minutes. Alright. Thank you all for coming today. If anybody has any questions, you can email me at support@targetviewtrades.com. Again, support@targetviewtrades.com with any questions at all. Gonna stop the recording right here.